Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, guys and girls. So today's step on the gold market mostly will be interesting to the intraday traders, because on a daily we're still keep watching on reaching major targets, and before this will happen it's a bit tricky to buy right here. So because market when it stands very close to the important targets, it's around 1670, first XOP, 1640 is a weekly OP, it's a large butterfly as well, right below the market. It always directs that market will turn at some moment down and hits the target. And only after that, some reasonable, moderate pullback starts. Of course, you could foresee that and anticipate that, trying to buy here and just the placing stop below these areas. So in this case, if even market will drop, you will not be washed out from the market by the stop triggering. But it's always more pleasure to buy at the proper price and waiting a bit more and get the position with the $60 or $50 the better price. That's why, from that standpoint, for daily traders, it's still nothing to do. So we're still watching for a major level. For taking the short position that we discussed recently on intraday charts, it seems that we need to wait a bit more, because as you could see, yesterday upper direction was relatively strong on intraday charts, and market has passed through the predefined intraday resistance levels that we discussed as potential entry on the short side. If you remember, we talked about the bread and butter sell. And on the way up, market actually has broken through all resistance levels and shows significant upper direction. That gives us in the result nicely looking bullish engulfing. What does it mean? It means that with this engulfing pattern, market could show more extended upward direction before it turns back again. And usually on intraday charts, it takes the shape of some ABCD pattern. So usually pattern itself becomes the AB leg, then some retracement and some extension. That completes the actually minimum target of this pattern. That's particularly what we intend to keep an eye on. So this is mostly context for intraday traders. On the 4-hour time frame chart, you could see this straightforward action, which completes the pattern of the engulfing itself. And now market entering the resistance cluster, which is starting 1720. It already has been hit. The next one, 1725. It's major 618 level right from this top to this bottom. So by the probability view, most probable that some pullback here starts right from this level. Also take a look at this previous consolidation, natural support resistance area. So that will be the area where with a high degree of the probability, market will show the pullback forming our BC retracement, BC leg. And if you consider in taking the scalp long position, that will be the chance to go along with this pattern. So approximately it should be somewhere maybe around 17 or so on. Then next leg of the engulfing should happen, so extension. Here is how it theoretically could look like. So on the hourly chart, I have tried to draw you the supposed shape of the price. It's not precise levels where market should turn and or where it should reach the target, but this is just mostly for shape purposes. So first, we have the first extension here. Now market stands at the resistance. Some pullback could start. For instance, that could take the shape of the hand and shorts. You can see this minor, some hint on this pattern already is forming. And in any case, if it will be formed, we could get here as minor ABCD retracement, either to this level or maybe it will be slightly lower. So by the features of the bread and butter, so it would be deep retracement could happen. It doesn't make the change the shape, but it's just give you the precise levels. And then once this ABCD retracement will be over and hand shoulders will be completed, we will get an extension. So if you're intending to go long with this setup, you need to catch this point where it will be, whether it's here, might be it will be lower at this level just because market completes XOP of the hand shorts. In this case, potential target also will be a bit closer. But your task, your purpose here is to catch this agreement with some fib level and ABC retracement. That's the proper entry point with this trading setup. Daily traders, if you still would like to go short at some resistance, you should keep an eye on this case on this point. That potentially could become the top of the right arm, right wing of this minor butterfly that's also could be formed here. And right from this point in particular, market could reestablish downside action right to the final destination point. So that's approximately the setup that we will keep an eye on. The risk for this setup is, of course, stands with this area, because now it looks like the double bottom also could be formed. In this case, it might be deeper retracement. So some stronger upward action here. But why I think that this scenario has less chances to happen is just because of the existence of the strong targets right below the market. Usually gold and other markets almost never shows very significant retracement when it stands very close to the targets. Sometimes it happens, but we're following the probability, and from the art perspective, well, chance with the minor ABC retracement and downside reversal has more chance to happen than double bottom here with the deep retracement. So that's what we have on the gold. Hopefully this helps you in your trading.